I moved from India to the UK with £500 in my bank account. 10 years later, I have built over £100,000 completely tax-free within my ISA as an NHS doctor. But here is what nobody tells you about ISAs as an NRI in the UK, and one simple mistake which can actually make your ISA taxable if you are not careful about it. And many NRIs I meet are making this exact mistake right now. Look, if you are earning good money in the UK but your savings are rotting in a 2% bank account while you are confused about ISAs, this video will change everything. I am about to show you exact system that I used, no fluff, no theory, just the proven strategy that works. And stick around because I will reveal how to get started with ISA as an NRI, plus the one mistake that could invalidate your entire ISA overnight. Hello, I am Dr. Suman, and in the next few minutes, you will have a complete roadmap to build serious wealth through your ISA as an NRI in the UK. Let's dive in. Alright, let's cut through the confusion. An ISA is basically a government approved shield around your money. Everything inside an ISA grows completely free from UK taxes. No income tax, no dividend tax, no capital gains tax ever. You get £20,000 per year to put in this ISA shield. Use it or lose it, and this repeats every year on April 6th. But here is the first trap most NRIs fall into: eligibility for an ISA. You can only contribute if you are a UK resident. The moment you land and start your job in the UK, you are ready to go. But if you are not a UK tax resident, then you are not allowed to contribute to an ISA. However, if you have added money previously, then you can keep that money, but don't add any new money. Next question is how to decide if I am a UK tax resident. You may be a tax resident under the automatic UK test if you spend 183 or more days in the UK in the current tax year. The second option is your only home was in the UK for 91 days or more in a row, and you visited or stayed in it for at least 30 days of the tax year. And the third option is you worked full-time in the UK for any period of 365 days, and at least one day of that period was in the tax year you are checking. There are many other nuances to the tax residency rule, and I would recommend reading the official HMRC website for more information. If in doubt, then please consult a tax advisor. Now let's come to the types of ISA. There are 4 types, but honestly, only 2 matter for you as an NRI. The first one is cash ISA. Think tax-free savings account. Safe, boring, low returns. Just like a savings account or even FD account back home in India. Only the returns in the UK are much lower. The second one is stocks and shares ISA. This is where wealth gets built. Stocks, fund, bond, all growing tax-free. The third one is lifetime ISA or LISA in short. This is where you save for your first home or for your retirement. But it has age restrictions and withdrawal penalties that make this complicated for many NRIs, particularly if you have plans to go back to India within the next few years. We will park this for now. The fourth one is innovative finance ISA. This is mainly peer-to-peer lending within an ISA. It's higher risk, not FSCS protected, and frankly, not where I would recommend you to start. Let's focus on the first 2 ISAs, cash and stocks and shares ISA. The other 2, the LISA and the innovative finance ISA, forget them for now. They are either too restrictive or too risky for most NRIs who are starting out. But here is where it gets interesting and where I made my first expensive mistake. So you are eligible. You have got your £20,000 ISA allowance. What do you actually do with it? Don't just dump it randomly. I use a structured 3-tier strategy. By the way, I am not a financial advisor and this video is not financial advice. If any doubt, then please do consult a financial advisor on unbiased.co.uk. You will find the link in the description box below. The way I would divide the £20,000 is like this. The first group will be the emergency foundation. First, for example, £6,000 goes into high yield, easy access cash ISA. This isn't about making money, this is about sleeping at night. Family emergency back home, unexpected bill, job gap, you are covered. Now for emergency fund, you should have a 6-month expense. People say 3 to 6 months, but I would prefer 6 months unavoidable expense. You can keep all of your emergency fund within the cash ISA, or maybe part of it within an ISA and part of it outside, because many investors prefer to use the £20,000 stocks and shares allowance and they don't want to waste it on cash ISA. Tier 2 is core growth portfolio. The biggest chunk, around £12,000, goes into stocks and shares ISA. This is your wealth engine. An example for this will be 60% in a global index fund, 30% UK equity, 10% bond. You can choose various options and mix and match accordingly. You need to be aware of your own risk profile and how much you want to invest based on your investment strategy. I have made detailed video about how to choose the investment fund. Please do go and check it out. Again, this is not a financial advice or recommendation. I'm only giving you some simple example which will help you to get started with your own research. Moving on to tier 3, which is accelerated growth portfolio. Final £2,000 for high risk, high reward investment. You can choose anything between sector ETF, individual stocks, if you know what you are doing. And this is where I screwed up badly few years back. I got excited about a biotech stock and invested £4,000 at one go. Within the next 3 months, the stock dropped 70% and I had no idea what to do about it. Sold all my investment at 70% loss. Painful lesson, but it taught me something crucial about stock market investing that nobody warns you about. Investment carries risk and you can lose your money if you are not careful about where you are investing. And here is the reality check that blindsides most NRIs. Your tax-free ISA, it's only tax-free in the UK. As an NRI, you are still subject to Indian tax law on global income, provided you are still an Indian tax resident. So those ISA gains, they need to be declared in your Indian tax return if you are Indian tax resident and booking your profit from your ISA. If you are UK tax resident, then ISA is non-taxable. However, for your Indian income, you need to rely on double tax avoidance agreement. This prevents double taxation but doesn't mean you pay zero tax. You offset the tax paid in one country against the other. The paperwork for DTAA is brutal, so please get in touch with a CA who is experienced in the NRI tax matters. If you want, you can search for an experienced CA who can handle these matters on the INRI platform. You will find the link in the description box below. Alright, where do you actually build this? Platform choice matters, but not for the reasons that you think. Forget the fancy marketing, focus on one thing only: fees. The ongoing charges figure, or OCF. As an example, a 0.5% difference sounds tiny, but on a £100,000 portfolio over 20 years, that's £25,000 eaten by charges only. You can start investing with a global ETF where you can own a small piece of the largest companies in the world. I have made detailed video about what funds to buy. Please do check out if you are interested on this topic. Remember, none of this is investment advice and I am not a financial advisor. Investment carries risk and you are not guaranteed to make any profit. So please do your own research before investing your own money. Notice I don't recommend individual UK stocks for most NRIs. Why? Because as a busy professional, I don't have time to research balance sheet of the companies, go through all their earnings call. It's more efficient for 90% of investors to buy the entire market in a fund or ETF rather than buying individual stocks. Now I know this might feel overwhelming. ISA rules, tax implication, investment choices. That's why I created something to help you get clarity on your specific situation. I have put together a free quiz called Discover Your Path to Your First £100,000. It takes just 10 questions and I will offer you a personalized report with actionable strategies tailored to your unique financial situation as an NRI in the UK. Whether you are just starting out or already have some investment, please do take this quiz. It will show you exactly where to focus your effort to reach that crucial £100,000 milestone faster. The link is in the description box below. It's completely free and takes less than 3 minutes. But none of this matters if you make the admin mistake that almost destroyed everything. Here are the 3 mistakes that could kill your ISA. Mistake number 1 is missing the April 5th deadline. That's £20,000 allowance gone forever if you don't use it by this tax year. Mistake 2 is not updating your address and personal details. I moved flats and houses, updated everything except my ISA provider. They sent a residency confirmation letter to my old address, went unanswered. I was one step away from having my entire ISA frozen. Mistake number 3 is assuming that you can contribute to your ISA after leaving the UK. You can keep your ISA, it keeps growing tax-free, but you cannot add another penny once you are no longer a UK tax resident. The notification letter that almost cost me everything taught me this. Every time you move your house, tell your ISA provider immediately. It could save your entire portfolio. There it is, the complete NRI ISA strategy I used to build 6 figures portfolio tax-free. It's not complicated product or high-risk bets. It's about understanding the rules, being disciplined, and having a clear system in place. If this helped you, smash that like button and subscribe to the channel. It genuinely helps other NRIs find this content. Drop any questions in the comment below. I read and respond to every single one. This is Dr. Suman helping you build your wealth one step at a time. See you in the next video.